Global financial markets in 2026 are shaped by a complex mix of macroeconomic forces, technological change, and shifting capital flows. For investors, understanding what truly drives markets has become more important than reacting to short-term price movements. This overview explains the key factors influencing global markets and how investors can interpret them within a structured framework. Markets today are no longer isolated. A policy decision in one country can influence currencies, commodities, and equity indices worldwide within minutes. This interconnected structure means that investors must think globally. Local events are often part of a larger economic narrative that affects multiple asset classes at the same time. As a result, successful investing increasingly depends on understanding relationships between markets rather than analyzing assets in isolation. Central banks remain one of the most powerful drivers of financial markets. Interest rate decisions influence borrowing costs, currency values, and capital allocation across the global economy. When interest rates rise, capital often shifts towards safer or yield-generating assets. When rates fall, investors may move into riskier markets in search of higher returns. In 2026, monetary policy continues to shape global liquidity conditions, making it a central factor in investment decision-making. Inflation affects how investors perceive value and risk. Rising inflation can reduce purchasing power and influence the performance of different asset classes. Certain assets, such as commodities or energy-related investments, often gain attention during inflationary periods. At the same time, high inflation can pressure equities and consumer-driven sectors. Understanding inflation trends helps investors anticipate how capital may rotate between markets. Liquidity determines how easily capital moves across markets. When liquidity is high, markets tend to show stronger upward momentum. When liquidity tightens, volatility often increases. Capital flows are closely tied to liquidity conditions. Investors continuously reallocate funds between regions and asset classes based on economic outlook and risk perception. Tracking these flows provides insight into where opportunities and risks may be developing. Geopolitical events have a direct impact on market stability. Trade policies, regional conflicts, and international relations can influence investor sentiment and market behavior. Uncertainty often leads to increased volatility, while stability tends to support long-term investment growth. Investors who monitor geopolitical developments can better understand sudden market movements and adjust their strategies accordingly. Technology continues to reshape financial markets. The rise of artificial intelligence, automation, and digital assets has introduced new opportunities and new forms of risk. Technological sectors attract significant capital due to long-term growth potential. At the same time, rapid innovation can lead to market cycles driven by expectations rather than immediate results. Understanding how technology influences markets helps investors identify structural trends beyond short-term volatility. Markets are not driven by data alone. Investor psychology plays a critical role in price movements. Fear, optimism, and herd behavior can amplify trends and create periods of overreaction. In volatile environments, sentiment can shift quickly, influencing capital flows across markets. Recognizing these behavioral patterns helps investors interpret market movements more effectively. Global markets in 2026 are influenced by a combination of economic, political, and technological factors. Interest rates, inflation, liquidity, geopolitical events, and investor sentiment all interact to shape market behavior. The financed peer perspective emphasizes understanding these drivers within a broader context rather than reacting to isolated events. For investors, the ability to interpret these forces provides a clearer framework for navigating modern financial markets. In an increasingly complex environment, informed decision-making is built not on predictions, but on understanding how global systems interact.